What's up, guys? Welcome back to another episode of Raw Stocks. My name's Rustic. We're going to take a look at Tesla's chart. We're going to do kind of a get ready with me situation. Do a little bit of analysis. We'll look at this week's trade plan for Tesla, what our bull and bear triggers are, where our take profit levels are, where our stop losses will be. A little bit of reason as why those trade plans work, and they work every single week. If you've been following, you know. If you haven't, check out the link in the description below. There's a link to the Discord where you can join as a free member, hang out with some other Tesla traders, as well as some of the Raw Stocks community. There is an upgrade plan that is also available for as low as $99 a month. You get 20 different tickers of trade plans, as well as 5 different channels of callouts and some additional analysis. So let's go ahead and jump right into the chart here and the trade plans. All these trade plans are created in collaboration with Gamma Edge, who is our options data provider. Use Gamma Edge for all of the trade plans that I create. So if we're looking at Tesla this week, it is Christmas week. There is going to be, potentially low volume trading. We got some data coming out on Monday and Tuesday, specifically some high impact. It's going into the, near the end of the month, so we could get some shenanigans going on. But all in all, we'll look at the data and we'll determine where our levels are, and we'll trade those accordingly. These trade plans are nice and easy to follow. When price crosses the trigger, you run it to the profit target 1, 2, or 3. If it hits the stop loss, you take your exit. There it is. Not for financial advice, for educational purposes only. I create these trade plans each and every week. Again, updating the Tesla and the index trade plans typically daily, so you can day trade these if you are using them. So let's go ahead and put our levels in. First, we got our expiration 12/26. That's this week. We have our bullish setup, which is our primary bias. It is call dominated. So our trigger level is going to be holding above 482 to 485. So we're going to put 482 as our level. If we go and we check what our overnight trading is right now, we're at 487.14. So we will be looking for price to hold above 485 since we're already above our trigger level. So let's go ahead and put that in the chart here. I always do my bull triggers in green, so we'll say 485 is where we want to hold above. We could potentially see a retest there when market opens, and if we do retest that 482 to 485, primarily 485, we can look to take a long call there and see if we can run it up to that first take profit of 495. So this is going to be our bull trigger. Again, currently, as I record this video, we are above the bull trigger. Okay, then we want to look at our first take profit level of 495. So put that in the chart. I usually do the take profits in white just so I can differentiate them. You can label them or not. TP1 would be our first one, and then we'll open that up and we'll set the coordinates to 495. So that's going to be our first profit target level as we move up. Now, it is risky if you want to try to just enter the call right away and run it to 495 when we open. But again, I'd like to see us retest this 485. If we don't do it in overnight trading right now and open up around that level, we open above, I'd like to see it back test that level before looking to take an entry. Above that, we have 505. And then above that, we have 512. So our max looks like 512 this week. I wouldn't expect anything higher than that. And if we look at our levels, our take profit level 495, we do have a call wall build up there. We have positive net gamma support above spot price. Okay, at 505, we have the upper expected move zone, dealer pinning risk as Vanna reinforces the upside. Again, these are using Greeks that are provided to us by Gamma Edge. Link in the description below. 512, our final take profit is the top of the expected move if volatility expands and Vanna remains supportive. Okay, our stop loss is at 470. So we can go ahead and put our stop loss in there. It's a fairly deep stop, and I will label that full stop. And and that's going to be at 470. Okay, now we'll take a look at our bearish trigger as well. So if we fall below 475, I'm going to do that in red, say bear trigger. Now, if you notice, the bull stop is below the bear trigger, so I'm actually going to remove the bull stop, and I'm just going to use the trigger, the bear trigger, as the stop loss. So if we're in the long and we come down to 475, we will exit our long, and we could look to enter a short position there. And if we look at our first take profit level, 465, go ahead and put that in as well. That's going to be TP1 on the downside, 465. And that's because delta turns more negative, charm pressure starts to increase. The bearish setup, although it's not the primary bias, would be a failure and a gamma breakdown. Okay. Our first take profit level is, again, the delta turning negative and charm pressure increasing as we push down. Now, 455 would be our second price target. Okay. And then ultimately 445 if we were to really get breaking down. 455 is below gamma support. You start to have dealer hedging accelerating price to the downward move. And then on 445, we have a structural breakdown and it's below charm supported zone. Our stop loss would be 485, which would be our bull trigger. Okay, so again, if we're taking the bull trigger, okay, we can run it up, but we'll take our bear trigger as the stop. If we end up below the bear trigger, back up to the bull trigger will be our stop. All right. So that's our Tesla trade plan. We can look at the flow context here as well. So Tesla's call dominated with positive gamma, 136,000 for the 1226 expiration. Dealer positioning favors price stabilization and upside continuation above 482 to 485, where gamma and Vanna reinforces positive delta with minus 6% expected move. Approximately 30 points. Sustained trade above minus Gex keeps dealers long. Okay, so above the minus gamma keeps dealers long, allowing price to grind higher towards 495 or 505. A failure below 475 flips charm more negative into time decay, increasing downside risk towards 455 and 445 as hedging pressure unwinds. So there's the logic in why these levels will work, all supported again by the options Greek, the deltas, the gammas, the charm, the Vanna, right? So all things considered when these plans are created. Now, if you look and we take that plan off and we look at structure, we can see, right, as we start to get above 485, we have the kind of the resistance levels up here around this 495. Now, if we can break above this 495, right, 490, 495, where we have these shelves kind of, then we can see that acceleration squeeze start to come in as dealers are having to hedge long in these positions as gamma increases and delta starts to make those contracts increase much faster. Then we can see that squeeze up to 505 and potentially even 512, right? But once we get below that 475, you can see there is some previous support at these levels. Then we can see that drop down to 465, which there's also some support there, right? And then ultimately, if we broke that support, just like if we broke up above 495, we could see that upside squeeze. If we broke down below 465, dealers got to start hedging short, and then we can see that downward squeeze to 455, 445, and down at 445 we do see some support back here from early December, as well as some support, early December 4th, 10th, 11th, 12th. So lots of support down at 445. That's why the expected move is not below that. So hopefully this has been helpful for you guys. You can stay prepared, have your levels on the chart. Again, basically price crossing the bull trigger or the bear trigger on the 1 minute or 3 minute chart leads us to be able to take those long or short positions and take them up to the first profit target at the minimum, and then potentially leave some runners to go to the further or deeper price targets. Okay. I will be updating these trade plans in the Discord for Tesla every single day, as well as QQQ, SPY, and SPX, as well as our other tickers get updated once a week every Sunday night. Again, if you want to check out the Discord, it's free to join. The link's in the description below. I'll leave a link to Gamma Edge, who is, again, our options data provider. And then once you're in the Discord, you certainly can look at upgrading to premium if that's something you want to take advantage of all these different trade plans. So hopefully, again, this has been helpful, informative, and allows you to better understand how these trade plans are created. We'll see you guys on the next video. Have a good night.